just get settled down.
Podium on करना please. On है.
Ladies and gentlemen, we're about to begin. Could we have you walk in and please settle down as quickly as possible? We've got an exciting lineup of guests and panels that is to unfold in the post-lunch session here at Times Group presents ET Now Global Business Summit. Please settle down, ladies and gentlemen. We're about to begin. Ladies and gentlemen, welcome. This is Times Group presents ET Now Global Business Summit 2025. We're about to begin the second half of this exciting session that has already unfolded, and there is so much more to come. We're expecting the Prime Minister later this evening. But even before that, before we get down to the next panel discussion, let me tell you and remind you all, there is this QR code that you'll find on the walls here. You can scan it. There it is. It gets displayed on the screen every now and then. With it, by scanning it, you can instantly access pictures from the Darbar Hall. And so within minutes, you will be able to get all those images on your phones, and then you can use those images and put them up on social media. And the hashtags that we are going with is scripting tomorrow and hashtag GBS 2025. So here we are, and as we continue this journey of ours, it's an exciting journey to say the least, and today's sessions have been very enlightening, very insightful. We're turning our focus to an exciting theme now, and this is something that we were looking forward to in a huge way, this fireside conversation. It's entitled The Money Tale: Markets, Mysteries, and the Masters. This is where we bring together industry voices. These are veterans of the industry. They are decoding for us the kind of trends that we are seeing, the risks that can be mitigated, the several opportunities that lie ahead. As part of this discussion, we have Kevin Sneaders joining us. May I ask Kevin Sneaders to please walk up on stage, President of Asia Pacific, Goldman Sachs. It's a pleasure to have you with us, Mr. Sneaders. And with him, Anshula, Managing Director and World Bank Group Chief Financial Officer. Ma'am, can we have you both on screen? Or rather on stage. So used to being on TV. And moderating this discussion, my friend and colleague Aisha Faridi, national editor at ET Now. Over to you, Aisha.
Thank you so much for that, Vikram. Hope everyone's had a hearty lunch and gearing up for the Prime Minister later this evening. Well, we're here to talk about the money tail, markets, mysteries, and the masters. We have the masters right here, Anshula, Kant, and Kevin. So let's dig a little bit about what's the mystery, how to make money, and all of it. Kevin, let's start off with you. Welcome to India. Obviously not your first trip. Yeah. So tell me, each time that you come to India, what's been the observation like? What are the changes? What are the growth biomarkers, shall I call them that? Because everyone's so obsessed about living longer now, so biomarkers is a phrase which is so often used.
Well, I have been coming to India for a long time, so perhaps I'm less surprised every time I come here, but nevertheless, the continued build-out of infrastructure is obviously a very visible sign. The continued development of middle-income consumers, and you can start to see their spending, certainly comes to mind, but a lot of it's also the less visible. The digitization of India is very much on my mind and on the mind of many investors because it's the backbone for a lot of what we've seen, whether it's the creation of a much larger banked population and the opportunity that it's created to also have a value-added tax and a sensible system of collections. That's part of the digitization. The other part that we see in flows, of course, is the financialization. It's a terrible word. But the development of the financial markets, the inflows from domestic investors, even though foreign investors are more cautious, has been a big part of the story. And clearly the formalization of the economy, the extent to which there is now more of a legal structure around the economic system, and in particular the bankruptcy code that came in, has been a big and important part of the reform. So there's what you see, but also the plumbing underneath it, which is why, for many investors, including ourselves, we're very positive about the medium to longer term outlook for India.
Anshula, what's been your observation? You've been here in India and an observer as first a banker and now at the World Bank. How has India climbed up the ranks when we talk about the $10 trillion economy vision? Where do you see India headed next?
I think India has made great strides in the last few years, especially since I left here about 5 years ago. You mentioned about the digital services, and if you viewing it from the global perspective, and what we really are working hard with other emerging market and low-income countries is that what sets India apart is the digitization of the many public services that are offered here. That adds to the governance, that adds to the transparency. It just adds up to the whole underlying plumbing that you were mentioning, Kevin. I think that's worked well here, and I think also the market infrastructure, the capital market development here, it sets India apart in many ways. So while capital flows, especially foreign capital flows, is a big focus area for us. We were just speaking before we came in here. So what happens quarter to quarter is one thing, but in terms of the trend that we are seeing, it's all positive for India, I think. They've taken the right steps. There is a lot still to be done. And I think the recently announced budget, again, focuses on some of the issues which are really pressing here.
Kevin, we all know that long-term India is a great structural story. I don't think anyone denies that. But tell me the challenges in the very near term. I know Anshula doesn't want to talk about quarter tak, as we call it in Hindi, from quarter to quarter, QOQ. But in the very near term, what are the challenges that you foresee for India?
And we shouldn't overlook the near-term challenges, but let's also keep them in the context that Anshula and myself both see in terms of the medium to long term. But in the very near term, and India will not be alone in this, you obviously have the trade issues, tariffs, the most beautiful word in the English language. There is a reality that the uncertainty that this environment is creating and what it means for the dollar and the strength of the dollar, or otherwise, is going to be a factor. And clearly India, even though in absolute terms, I think its deficit with the US is around $46 billion. It is nevertheless notable that in the fact sheet that was issued with the recent round of news around reciprocal and fair tariffs, India was called out in that, and obviously the Prime Minister was there in Washington and has already started a process of negotiation. But there are real consequences, particularly on the exchange rate and also, therefore, on the trade outflows. And India does and is an important part of the global trading system. So I think that's a near-term challenge. Secondly, of course, inflation and monetary policy will be a challenge. Whilst we have seen some moderation in inflation, we saw a cut in the rates. Perhaps it wasn't quite on the basis of being accommodative, it was neutral. You know, in investors' minds, that's also a signal. And we saw a softer earnings season, and that earnings season was softer in the back of some of the slowdowns we've seen in the consumption side. So there are near-term headwinds, but to be clear, we see these as speed bumps in what is a longer-term structural growth story. And the speed bumps in some way are a cyclical correction. There's been a fiscal consolidation. There is a macroprudential set of acts and policies that are taking place, but they are real near-term issues and they need to be got through. And foreign investors have been cautious on the back of them, as we've seen through the outflows that have occurred in recent months.
Anshula, tell me, what role would World Bank play here? When you talk about emerging markets, how do you think World Bank can sort of support emerging market economies, such as India, to try and develop capital markets?
You know, emerging market, EM capital markets as we call them, they are not homogeneous, or they're not all alike. So India is at a different trajectory, other parts of the world are, you know, emerging markets are at it. So we have, you know, it's a key pillar of private capital mobilization, which is a big focus area for us, but also resonates very much with the Indian endeavor to attract more cross-border investment, foreign capital flows into the country. And we work with countries to help them establish policy frameworks, legislative reforms, the entire spectrum of the capital market infrastructure that is needed. We work with countries to help develop. Again, in India, it's all pretty much well developed, but the domestic government bond markets, the money markets, the derivative markets. I believe what we can do more here, while the rules and regulations are all available, is how to sustain pension funds, insurance companies' flow of funds and resources into the capital markets on a sustainable long-term basis. That can sort of rejuvenate the corporate bond market, and that could, make available more resources for infrastructure, etc., that are needed here. But, let me also add, and you talked about the underlying structural growth story. One key trend that we are seeing globally, and in some ways that resonates with the concerns that developed world is facing today related to migration, etc., that we estimate that about 1.2 billion people will get added to the workforce in the next 8 to 10 years in emerging markets. And there are only about 400 million jobs likely to happen if we go along the way we are going. And there is a huge, huge gap sitting there. And I was really pleased to see the recent budget that came out last week. There is a big emphasis on job creation in India, and that is actually now one of the flagship key focus areas for the bank. So it's not, you can't create jobs out of thin air. So what are the sectors which will help create jobs locally? What are the sectors, given there is a backdrop of, there's a technology-related revolution that's happening. So what are the kind of jobs that will be sustainable? Where are the skills which are lacking, which need to be developed? I think those are the areas which be of key interest for us to work with in India. But of course, there are many sectors where we are working with, but the key focus area today for me as the CFO at the World Bank is how to help countries mobilize private capital and private investment into the countries. Because, the needs are so huge that everybody understands now public financing or development banks like us are not going to be enough to support the development needs.
That's so interesting that you say that. And, the numbers that you gave in terms of what the job requirements are going to be and how much the gap is. Tell me, how do you get the tools in place to actually try and bridge the gap and aid it?
So let me give you an example of one big target, big ambition, and it sort of rallied around a lot of development partners and private sector partners with us is, let me give you one more statistic. Roughly half the population in Africa don't have access to energy. So you talk about where can the growth or jobs come from if there's no access to energy. 600 million people. So we've actually now gone on record to announce a target of, together with other partners, to give access to at least 300 million people to electricity by 2030. It's a hugely ambitious target. Public sector money is not going to be enough. And we need the private sector to come alongside us. Last month, we had 30 heads of state in Tanzania commit to the policy reforms and the structural reforms that will be needed. We've actually signed off that we commit to these reforms because you can't actually give electricity access without the policy enablers to come in. We have development partners, we have philanthropies, we have foundations, and how we see our role is a catalytic role. For instance, IFC is now setting up a distributed renewable energy permanent equity structure which can give, first loss equity, junior positions, take junior positions to catalyze private sector investment into this. So this is how, we try to, now this whole process of energy access will create jobs, but this is what will lead to growth and development, and, it's a virtuous cycle of job creation. This is an example of what we are trying to do.
And when it comes to India?
So India, we don't try to impose really our priorities. Most often we try to find is what are the governments, any country, not just India, but what are the development priorities for India? And we work together with the country to help them achieve their development priorities. And we don't try to spread ourselves too thin. So there are certain sectors, there are certain asks. I met with the government authority yesterday. There are the programs where they want us to work with them, and a key, I think, value add that we bring is also the knowledge part of it. It's not just the dollars and cents, because we acquire learning and knowledge globally and experience in different parts of the world, and the government wants us to bring that knowledge together with the financing to support them in various sectors. Yes, jobs is one of them. It's not a project by itself, right? It's an outcome. So it could be about skilling, it could be about education, it could be about health, human capital, and then, of course, sectors which will create jobs. So those are the areas.
Interesting. Kevin, when you analyze a country such as India, and you gave us a sort of SWOT analysis on what's working in the short term, what's not, and while India continues to be a great structural story, tell me, how does geopolitics and all the talk around tariff really impact India? And does it really?
No, it does. Geopolitics, it's not that long ago that you never talked about geopolitics. You'd be talking about domestic economics, and it's really been a shift that I don't think is going away. So we shouldn't think this is just a near-term moment. There is a structural shift going on in the world. And at one simple level, it's clear that there are going to be a number of countries or groupings of countries that play a very significant role in the global economy. India is clearly one of them. Of course, there's China, there's the United States, there's the European Union. And in that context, I do believe that we are going to see increased emphasis on geopolitical factors. Sometimes it's taken a bit too far. It doesn't completely sweep away economic reality. So, for example, there's a lot of talk about supply chain movement. In practice, whilst there has been some, it's been slow. It's been very slow, because it takes time for supply chains to relocate. It takes time for the whole ecosystem around the supply chain to relocate. So if you think about the automotive sector, you continue to see it's a very distributed economic model in one sense, but it's very hard. You've got places like Mexico where you do have a critical mass of the suppliers and so on, but a lot of the parts are still coming out of China or other parts of the global economy. So it can be overstated in practice, but I think for India it's going to be an important factor. In terms of the tariffs, what's interesting, of course, is if we think back to the start of this, a lot of the conversation, particularly in the United States, was around China. and there was an expectation of up to 60% tariffs in China. In reality today, what we've seen is first off announcements about Colombia, which actually had more to do with an immigration policy approach. Then we had Canada and Mexico, two core partners of the United States, as being the country-specific focus, with China added, but Canada and Mexico were 25%, China was 10%. Then we moved to the universal tariff, or a conversation about it, that had featured during the election campaign in the United States. But we've shifted from a universal tariff. The most recent conversation that was ongoing last week and now over the weekend is around reciprocity, reciprocal tariffs. And reciprocal tariffs are actually blind geographical affiliation. They're a mathematical view of what's your tariff on me and what's my tariff on you. And that is therefore less geopolitical and more universal in nature, but it's taken us away from a universal tariff to, again, a country-specific model. And looks like we're about to see product-specific tariffs, pharmaceuticals, chips, auto. That's what's being previewed for next week. Now, if you look at all of those, they're actually economic and trade-driven rather than pure geopolitics. But I do think that ultimately the geopolitical reality is part of the conversation, and it will be impacted through supply chains and other movements, and India will be part of that.
Interesting. I guess the buzzer's up, unfortunately. That's all the time we had. But thank you for giving us a color on where India stands right now, and of course how World Bank is helping achieve India the dream of the $10 trillion economy. Thank you, both of you,
Thank
so
you.
much. Thank you.
Thank you indeed. Kevin Sneaders, Anshula, Kant, it's a pleasure having you with us, giving us insights.